Yo, what's good everybody? So, in this video, I'm trying to keep the videos kind of short, sweet, simple, to the point, so then you guys obviously don't lose your attention and kind of just start getting distracted. I want you guys to watch the video, take as many notes as possible. So, maybe I may miss out on some things, but I kind of want you to get the overall concept. So in this video, obviously based off the title, what I'm going to be talking about is market randomness and accepting the randomness in the market. So as many of you guys may know, you may see patterns that actually repeat themselves over the course of a few months to a few weeks when you've been trading for quite some time. And it's kind of like, bro, I've seen this pattern play out every single time. Once price hits this level of resistance, well, let's just kind of break it down a little bit simpler. Once price breaks this resistance, you wait for the pullback to that previous area of resistance and wait for resistance to form a support. This is the simplest setup possible, called the break and retest setup. You've probably seen that setup play out a million times and you're like, perfect, I'm gonna enter this trade and price is most likely gonna go in my favor. Although yes, price has a higher probability of going in your favor, it doesn't mean it will, and that's kind of the randomness that you have to accept in the market at times. There's also different times where you actually may see price do one thing that you kind of didn't expect it to do at all. More importantly, what you have to understand is that you're not always going to be right on direction. Sometimes, or hopefully the majority of the times, you're right on direction and really you're looking at increasing your risk to reward as best as you possibly can. But then there's also going to be times where a trade will be literally a few pips from your take profit level, right? And price goes completely against you and it ends up going to your break even or your entry. Again, that's part of the market randomness. You may search on Google, what happened? Why did my trade go completely against me? You're looking for some impact news. You may be looking for some overall world economical news, right? And there's absolutely nothing there. That's just, again, part of the market randomness. You have to be looking at different areas of liquidity. You have to keep all these things in mind. Most importantly, what I'm trying to get to you in this video is just because you see that type A setup where you have 5+ confirmations and you've seen that setup play out every single time, and 80% of the time, let's just say, it goes in your direction, doesn't mean it will, because you still have that 20% chance that price is not always going to go in your direction. You still have that 20% chance. So what I'm trying to instill to you in this video is that, more importantly, when you do see that setup, keep in the back of your mind, even though you've seen the setup play out in your favor 80% of the time, keep in the back of your mind that the market can be super random at times and not always everything is going to play out in your favor. There'll probably be times where you're almost at your take profit level. Let's just say 4 times your risk. I'll give you an example here, right? So I was actually in on a gold position a few months ago. It is currently May. I was in on this gold position, I want to say in October, right? I was up $75,000 on this gold position, and price completely broke through not my stop loss level. Price completely broke through my level of support and continued to make new lows. And then out of nowhere, price completely flipped and started going bullish like crazy. From what I saw I was up 75K, then 70K, then 65K, 60K, and I was losing profit very, 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 very quickly. So in a situation like that, what I decided to actually do is put my stop loss to a point where I'm going to secure a minimum of a $50,000 profit, because I want to let the market breathe a little bit. And exactly what I expected happened. Price hit my stop loss. Although yes, I got out with $50,000, I gave back $25,000 to the market, and price completely went in the opposite direction. If I would have held or waited for my stop loss to get hit at break even, I would have completely thrown away an amazing trade, a $75,000 profit trade, right? And I would have been so upset with myself. This is why, when you keep this in the back of your mind, that the market can be very random at times, right? When you keep that in the back of your mind, not even, you put it on a sticky note, put it right in front of your monitor, right? So you could always read it. You're more protective of your capital. And that's overall the ultimate goal when it comes to trading is, we're not trying to make as much money as possible. We're just trying to protect our money. And in turn, you're going to make more money by just protecting your own money. Keeping things like risk to reward in mind, using trailing stop losses, and not always being so greedy to want more and more of the market. And really, at the end of the day, trading is all a balance, because you have to try and find the balance between greed and letting your winners run at the same time. So if you guys could just trade with the fact that the market can be very random at times, you're going to be able to really focus on that risk management a lot more crucially than you were if you have the mindset of oh, I'm most likely going to win this trade anyways. Let's just put in, 10 lots on a $10,000 account, right? Versus like, you know what? I don't really understand the fact that the market can be random at times, but I have a higher probability than winning on this specific trade than I actually do losing. So let's just say your specific type A setups win 70% of the time. Well, it's okay. Well, 7 out of 10 trades are actually going to win, but I still have that 30% chance of losing. So I'm going to protect my capital, and I'm just going to make sure that I'm looking at the overall bigger picture. Now, what is the risk to reward ratio in this position? Hey, look, I can gain 3 times whatever I'm risking on this specific trade. You know what? The trade is definitely worth it. Let's actually take this position while again keeping in the back of the mind, like, hey, price is almost at my TP3. What I'm going to do is I'm going to move my stop loss to a 2-to-1 risk to reward ratio. So if price just randomly decides to drop, right, then I at least get out with a 2-to-1 risk to reward ratio, whatever the case might be is. And when I talk about random marketness, it doesn't always mean like the market's just kind of random and we're kind of just guessing with risk management, right? We are always going to have an edge in the market as long as, again, you have confluences, as long as you're looking at the probability of the trade, you're following the trend, you're looking for price action signals, etc., etc. But more importantly, when I talk about market randomness, is there's going to be times where price doesn't always go to your TP, right? Let's say, especially if you have a big TP at a 4-to-1 risk to reward ratio, price could literally go from a 1-to-1 to a 1-to-2 to a 1-to-3 and then completely drop and go and hit your stop loss. Again, that's part of the market randomness, right? This is why you want to focus on trailing your stop loss and really cut out as much greed as you possibly can. Anyways, hopefully this video does help. I will talk to you guys in the next one.